This
drilled
conference will
into
now be recorded.
we specifically drill into that space that is the traditional long-term care product. We really believe that this is the most affordable and comprehensive solution in the marketplace today. So that's where we're going to spend our time talking about the products that we've had in place for, it's been about 7 years now. So this continues to be a huge value added for our consumers, as well as a fun fact, it's our number one profitable product at our company. So as you know, Mutual of Omaha, we have a lot of different product lines going on, but the long-term care continues to be our most profitable product. It was actually designed by who is now our CEO of the company. When he was an actuary, he designed this product. So we're pretty proud of it. And it really speaks volumes to just our commitment in the long-term care space. So we'll go ahead and started here. Oh, here we go. Here is our building in beautiful downtown Omaha. We've been at this location for a very long time. It continues to be our home base. I actually work out of Lincoln, Nebraska, but go up to the office a couple times every month when I'm not traveling around meeting with different agents or marketers. The long-term care advantage, I kind of tapped on this, but to give you a little bit more information about Mutual of Omaha, for more than a century, Mutual of Omaha has really been in the forefront of consumers' minds. We like to think of ourselves as a very strong, stable, and financially secure insurance company that's ready to meet the consumer needs, and especially to be there to pay claims, right? Because that's what it really comes down to. We are a mutual company. This really speaks to the reason why we've continued to be such a viable player in the traditional long-term care space. As you know, by being a mutual company, it enables us to focus on the long-term needs of policyholders as opposed to those short-term demands of the stock market. And with a long-term care product, which really has a very long investment tail, it's worked very well for us to have that type of a product design and be a mutual company. We have been in the long-term care insurance business since 1987, so we have quite a bit of experience in that business. And of course, our rating is A+, which really speaks volumes to what consumers like to see when it comes to a long-term care carrier. So what I like to say is Mutual of Omaha really knows long-term care. This is our space. We believe in it, and we continue to offer a product that right now is the best-selling traditional product in the market space. So it's pretty exciting times for us. You're probably aware of just the evolution of long-term care products, and I like to bring this up just because it has really changed what the dynamics of long-term care policy offers to consumers today versus 10 years ago, 20 years ago. As consumers' needs have changed, the industry has reacted in developing solutions to meet those needs. So way back when, people were buying Cadillac products, 5% lifetime inflation, benefits that paid for lifetime. It was just a whole different market space. And what we determined was very difficult for carriers to price for that. And that's why some of them have gotten out of the industry. But also we recognize that today consumers want choices, and they most likely want to stay at home as long as possible. So that's kind of been a win-win for everybody. It costs less for the carrier to pay out claims for clients to stay at home. And then clients are really receiving the care that they choose to inside their own home, with some definite options and benefits there that weren't on policies of the past. So as you can imagine, this progression of care really plays out to where you might take our cash benefit, and I'll get into that product detail here in a little bit because it's a really nice product feature. But by taking just a cash benefit, it might be neighbors or family or friends that can come over and fill in the gaps and help take care or do the running around or grocery shopping or those sorts of things. That's typically what we start to see when we see people declining in health and getting to where they're going to need claim and stay on claim for a while. And then we look at a more comprehensive care in the home, and that can be provided by different professionals, agency professionals, and we also can provide benefits in the home with home modification, medical equipment, all sorts of different things to really make sure that they're taken care of in their own home. Then the next progression is obviously some sort of assisted living. And, back in the day, people used to think assisted living, oh, that sounds terrible. And I think most of us have experienced what that looks like today. Maybe we have a relative or family member that's been in one of these assisted living facilities, and they're quite nice. They offer all kinds of different options now that were not available before. So these assisted living facilities are really becoming more appealing to clients as well. And then eventually, we're there for the nursing home claims as well, and to take care of them in the final stages their living arrangements. I like to tell everybody who looks at Mutual of Omaha just what our typical buyer looks like, because as I had mentioned, there are lots of long-term care solutions out there, and I think it helps for people and agents like yourselves that are working with clients to be able to really look at that demographic and know what is going to be a really good fit for Mutual of Omaha. So our typical buyer is female, Caucasian, ages 55 to 64, most likely married with adult children. We do have most of our policies that are issued as a shared care, so a partner situation. Typically, it's a white-collar professional that maybe is not even yet retired, but looking at what they want for their retirement planning and how they anticipate it playing out for them. College educated, a homeowner, and most importantly, a planner, somebody who really is thinking about the future and is involving their family in these decisions, very family oriented. So what we know, I love this fact, which is 35% of consumers had a loved one that needed long-term care. That's usually the trigger for somebody to think, how's this going to play out for me? What do I want my plan to look like? Because they've witnessed or experienced some sort of long-term care need with somebody else that they know. So what happens when a long-term care event happens? Well, there's a lot of things that go on here with families, and it can be very scary times. It removes a lot of that security, and we ask our claimants, how do you feel? What is the reaction there? And it's just that scariness of the unknown, and not having asset protection. You need money for care and expenses, not knowing where you're going to pull that from. Asset transfer happens quite a bit here, where you're trying to think, what asset can I pull from to take care of some of these expenses? And I think that the thing we hear most that really breaks my heart is just that loss of independence. That's when people feel like, okay, I no longer have my independence. People are coming in here trying to make decisions. I don't have the money to pay for the things that I want to do. And it really can be very disruptive to families. So what we know here is that we know 18% of consumers buy long-term care insurance for security and just peace of mind. It is something that when you're talking to clients, you're going to find out very quickly that their main reason for going down this path is just the peace of mind of not being a burden to somebody else in their family. What happens when a long-term care event happens with long-term care coverage? So here's going to be the difference. This is where we're providing a value added. Your clients have an action plan. The clients can choose to stay at home. They maintain their independence. They're protecting the income and assets that they've worked their whole life for and probably plan on leaving some of those assets to loved ones. They avoid being dependent on other family members. And they have access to our care coordinators and such a high quality of care that we can provide. I will tell you, we have 6 care coordinators located in our home office in Lincoln, Nebraska. These are registered nurses. They act on behalf of the client. So they're really advocates for any of our clients that call in and say, this is what is going on with mom or dad. I was home for the holidays, noticed that they really aren't able to get around and do things that they should be doing. That can trigger some of these discussions to find out, are they ready for claim? Is there home modifications that can be made to help them get along better at their house? Those sorts of things. But I always tell agents, if you have clients you're working with and they want to really know what's going to happen here at claim time or what Mutual of Omaha is all about, we can set up a call and we will talk to your clients on the front end of the sales process with one of our care coordinators to really find out the intricacies of what their policy is going to offer. So what do we know? Well, we do know that 70% of LTC consumers discuss with family and friends before buying. So this is a process for them in which they're going to include outside discussions with other family members and include them in the decision-making process. The value of long-term care insurance, lots of different things here, but I'll tell you that what we hear time and time again is that it's really about remaining independent in the home and being able to maintain a good health with receiving adequate health care. And we know that if that happens early and extensively, that is going to increase the quality of life and allow them to live a lot longer. And then, of course, just having enough money to meet your everyday needs and knowing that you're not going to outlive your expenses and you won't have to liquidate assets and income. So we also know that 17% of consumers buy LTC so they won't be a financial burden to their family. And I can speak personally to that. I have my long-term care plan in place, and it is specifically because I can't imagine thinking, having my two children having to take care of me, especially when they might not even be living in the same state as I am at that time, or, I just know that would not be a good plan, so I made sure to get my plan in place. What should you ask your clients? There's so many good conversation starters, and we have a lot of marketing pieces to help you out with that. But I really think that the best discussion is really just sharing with somebody your own experience if you've had long-term care happening in your particular family that you can speak to. I think that most people can resonate with some part of that story. And I also think that it's important just to ask the questions. Where do you see yourself? What would you like your plan to look like? Who do you think is going to take care of you? And what is your plan if you do need care? What are you going to do? Who are you going to ask help from? So what we know is that 52% of consumers buy long-term care while planning for retirement. So it's all part of the bigger discussion, right? And that 65% of consumers discuss long-term care with an agent or advisor. So it's really up to you as their advisor to start those initial conversations and start putting that in their minds as they're planning for retirement. The cost of long-term care services are very expensive. So I think it's always important just to give you an idea of what the national averages look like. And we have pieces that can speak to this, but I just like to throw this up here to give you an idea of what it looks like at this time. Of course, it depends on where you live in the country, and we can break it down and get more specific. But you're talking a lot of money, at least $60,000 per year to be cared for in a facility. So the value of traditional long-term care, it's really great to just look at what you would be paying in and what you could potentially be taking out of this policy. And then it really starts to resonate with clients. It sounds expensive maybe at first to them, but when they look at the benefit that they can pull out of a long-term care policy, it's astronomical. So we just took a 50-year-old male, female, because it's always kind of interesting to see what the difference in the rates are for female, obviously more expensive than males, what the annual premium is on a typical policy, the number of years until age 80, which is kind of a nice place to kind of think about. That might be the point at which you would be needing to take a long-term care claim. Premium paid on this till age 80. It's $32,000 for a male, $51,000. The cost of care home with a 3% inflation rate, you can look at those numbers. That's, astronomical amount. And the policy benefit 3 years with a 3% inflation, it really provides a big lift of being able to pull out of a policy a great benefit for the need when the need arises. So, like I said, we have several different brochures on really getting clients comfortable with understanding the long-term care need. And cost of care is certainly probably one of our most popular products when it comes to consumer-facing pieces. This will break down for them based on where they live, what the cost of care is going to be in that state. It provides national averages as well as state averages. So what we know, we did a study, and what we recognized was that price really does matter to people. And I think I had mentioned that years ago, people were buying big policies, right? And they were very expensive. And I think the perception kind of stayed with clients out there regarding long-term care. But the truth is, most clients can get a pretty good policy for about $100 a month. So for a couple, that could be $200 a month. But we like that price point because what we recognized is if you can start in about that range for most clients, they automatically can see the value. They can find ways to pull from something or to not eat out or buy so many Starbucks to start paying $100 a month, knowing that the benefits of this down the road could be just astronomical for them and their families. So just a quick snapshot of what our cost of care calculator looks like. You can find this on our website that you just plug in the specifics for your clients, and it'll generate some numbers for you that'll give you a pretty good idea of what's going to happen, not just today, but years and years down the road when it actually comes time to take a claim on a policy. Partnership benefits. We've talked a lot about partnership benefits because, again, it's probably one of the best-selling features when we talk about traditional long-term care. So it depends on the state you're writing in. But for certain clients, the state wins because it really helps stabilize Medicaid by delaying the use of the program. And then clients win because it allows them to protect a portion of their assets. So what they're paying into long-term care, they would be able to protect that from their assets. So what we know is that 24% of consumers cite protecting assets as the main reason for purchasing long-term care. So that's one of every 4 buyers of long-term care is doing it so that they can protect their assets. We do have a partnership inflation grid because I do get asked this question a lot. Depending on what state, what would the partnership program look like, and what is the minimum inflation that you have to purchase for that to happen? So John or myself can get you the entire presentation, but certainly if you want this slide to keep for your reference, it's kind of a nice piece to have. So to go into our specific product, and I know most of you are somewhat familiar with the Mutual Care Solutions, but I do want to kind of point out some features that I really think have been huge selling points for the Mutual product. We do have 2 different products, and they're based on the same product chassis. So you probably see both products are very, very similar. There are certain situations where you might run the Secure solution and find out that in certain cells it might be just a little bit less expensive. I will tell you that we came out with the Secure, and then a few years later we came out with the Custom. And the name really suits it well because what we were trying to do is to be able to customize to each particular client's needs and budget restraints as to what we could offer them. So I'd say 70% of our sales coming in the door today are in this Custom solutions. It's just a richer policy that's going to offer some more flexibility for the client, and in most cases is the same price as the Secure solution. So a couple things that you'll find on the 2 different products is that both of them have a cash benefit built into the policy. On the Secure solution, that's 30% of the monthly benefit, and on the Custom, that's 40% of the monthly benefit. So what I mean by this is that if you have our policy and you go on claim, you immediately have an option to take the cash benefit. There is no elimination period that you need to satisfy. You could just immediately tell us you want 40% of the monthly benefit. So if you've purchased a $3,000 monthly benefit, you would get 40% of that, and it would be indemnity. So we wouldn't look for receipts or reimbursement or need to know really anything about it. If you qualify for a claim, this would be an option that you could just take that cash benefit. A lot of people do this and love it because they might be staying at home, and that cash benefit is all they need to get them what they need, the full care that they need at that time. And so down the road, if they their health condition changes, or they decide, you know what, this was a nice bridge for the gap, but the truth is I'm going to need more extensive care and it's costing more, then you would just switch to the reimbursement monthly benefit that you have on your policy. In doing that, I should add that at that point you stop the cash benefit, you would have to wait through the elimination period. Most of the time, people put 90-day elimination period on their policies. There's lots of different options. Like I said, the product is very similar. Issue ages did not change for the two different versions. It is partnership qualified based on your state. There are different limits. I will tell you that the maximum monthly benefit that we issue is $10,000 per month. That's all carriers combined. So if they have an existing plan with Genworth and it's $5,000, then we would be able to issue an additional $5,000, but no more than that because we don't want to overinsure anybody. But you can see that there's lots of different options. I will tell you that a couple of the built-in features just really have to do with care coordination and making sure that we're getting people the care immediately that they need from the get-go, and making sure that that benefit adjusts as their health changes as well. So we've got all kinds of home health care, adult daycare, and then eventually assisted living and nursing home benefits. There are some waiver of premium options. I do get asked about this. We don't typically see a lot of waiver of premium put on policies, but eventually that will come up. One rider that I had mentioned earlier in the presentation, and I will tell you, at least 60% of the policies we issue are shared care. So this is a benefit that you take out on partners or spouses, in which the policy the policies are basically the exact same. So the benefit for both spouses would be the same amount, or the riders would be the same amount. But you add this shared care on, and it's a rider, so there's an increased cost to it. But it allows for one partner to dip into the other partner's pool if they have exhausted their own pool. So it's a great way to double benefits. And I'll tell you, one unique way that we hear agents are selling this is a lot of times you might be sitting down with a husband and wife, and sure enough, it's usually going to be the husband going to say, I don't need this, I'm never going to use it, but here's the deal, you can come back to them and say that might be true, but if you get this shared care, it's really like getting more benefit on the female at male rates, right? Because she would be able to dip into his pool. And as we know by statistics, it typically is the female who goes on claim. That's why the rates are a little bit higher there for females. Lots of different options. I think I had brought up the return of premium. I really like the waiver of elimination period for home health care. This is a very low cost rider. I think it adds about 2% to the premium of your premium pool. And what that allows is that if you stay at home, there's no elimination period to satisfy. What's really kind of cool about this too is that, as I had mentioned, most people start their care at home. So say, for example, you stay at home, you start your care, you've got this rider on there, there's no elimination period to satisfy. We start paying your monthly benefit to you. Well, you've satisfied 90 days and then, something happens, you really do have to go to a facility or the care needs to be increased. At that point, since you've already satisfied your 90-day period at home, there's no new elimination period. So in essence, this is a little bit like buying a 0-day elimination period. Really good bang for your buck on the product. The inflation protection options are really what make our products sing. I love to talk about inflation because not only is this what's going to trigger you to be able to have a very nice pool of money when it comes claim time, it's also a great way to dial up or dial down the premium for your client and personalize this product to fit their budget needs. So on the custom solution, and I always like to talk about it because this is where we've enhanced the product in the custom, is that we allow, if you buy the policy with at least 1% of inflation on it, we allow you to buy up or buy down up to 5% in quite small increments of 0.25%. So every policy anniversary, the client has the option to do that. They might decide, right now, I'm in my money-making years. I'm comfortable with a 3 or 4% inflation, but down the road, when I retire, I'm going to be on a fixed income. This is a great way to, at that time, buy down to a 1% inflation, knowing that you've locked in this large pool of money and reducing the premium costs at that time. So really some neat things you can do to personalize this for your client's needs. The other thing that I think is a huge selling feature, and we actually see this on a lot of policies we issue because it can really dial down premium, is to have an inflation duration. So I always tell people when they talk about, long-term care, we've seen all these rate increases. The reason most of those rate increases took place in the past is because carriers can't really price for inflation. We don't have a crystal ball. We wish we did, but we don't. So what we've done on this product is to be able to say, you know what, if you're okay just doing a 20-year inflation, so you buy it now and you say, I only want 20 years of inflation at 3%, that gives us as the company a much better idea of how to price for it and going to allow you as the client to save money by buying it that way, because we know that we're not going to be paying lifetime inflation. It's going to be limited to 20 years or 15 or 10 years. So a great option on the product if you haven't taken a look at that. Definitely the next time you illustrate, please take a look at that. We do offer some premium discounts. Obviously, if both partners are issued, that's 30%. If only one of them is issued, but they're still married or have a partner, that is still a 15% discount. So I sometimes get asked about that. Preferred, there's a 15% discount. And we do have some association, producer, or common employer discounts. So if that's something you have in mind, if you work with an association, call John or ask me. We do have to get some information about the association, but that might be a way for you to set that association up and they'd get a special discount of 5%. Again, the premium savings, quite significant. So they do work in unison with each other. If they are, preferred and partners, obviously you get a better discount there. Here's another slide that I think really demonstrates the effectiveness of what I'm talking about when I talk about the compound interest. What I did on this slide, and I've got several different ages, and I know it's kind of confusing with a lot of numbers, but just hear me out. If we do a 3% compound, we can actually show you 3 different ways to pick out what your premium would be. So in the first column, we have a 3% compound for a lifetime. And we have a $4,000 monthly benefit on there. And here's going to be an idea of what that annual premium is going to look like for your clients at different ages. The second column, what we did here is we said, okay, how about 3% compound, but I'm okay limiting that to 20 years. And look at the premium savings you're going to get from just limiting that to the 20 years. And of course, what does that increase your pool of dollars at after 20 years? You've got a nice, chunk of money here. You've got a very nice pool of money that you've built up at 3%. What I did on the next column, which I thought was interesting, because you might run into clients who say, you know what, I think I'd like 3% compound for 20 years, knowing that I can buy a higher or monthly benefit right out of the get-go. So then they would get that monthly benefit right from the get-go, and look at how it's increasing your pool of dollars after the 20 years. We do also offer some return of premium options, which I had mentioned. I like to show this slide because it really demonstrates your different ways you can use return of premium and how that's going to affect the premium. So we have no ROP, and that's typically how most of our policies are issued. We do have an option where you can get 3 times your monthly maximum benefit at death. We do have an at death less claims paid before age 65. And then at death less claims paid annual premium, which of course would be the most expensive option. So real quickly before we wrap things up, I kind of like to just throw out there what I hear from people like yourselves and what they love about the Mutual of Omaha traditional long-term care policy. So many of these I've mentioned, but let me just give you food for thought. If there's something that I can provide to help you find ways to sell and talk about our product, I love to do that. So one thing that I hear people loving about our product is our definition of home health care, a home health care aide to come in and provide services in the home. What's very interesting is we don't require that person to be employed by an agency. So if you have a maid or a church group member or somebody that you've trusted for years and years and years, that person can go down to the state and get certified to be a home health care provider. And that's going to meet our definition. And we'd be able to pay a monthly reimbursement benefit on that. Another thing that people love is just that 40% cash benefit. And with some people that resonates as the indemnity portion of the policy. It's useful for family that want to be the caregiver. They want to be able to take care of that person. And the great part about it is you can flip it anytime to the full monthly benefit and then back and forth. So it's really a great way, and it can be looked at as almost a savings plan, because if you don't use the whole 40%, that can be stored away or saved in a way that can help pay other expenses down the road. We do have a built-in monthly home care benefit. A lot of other carriers charge more for that to be a monthly benefit, but it's just standard baked into our policy. I think I had mentioned the shared care, and one sales concept we love is it's like getting extra coverage on the female at male rates. So, something to keep in the back of your mind if you have clients that are concerned about that. Calendar day elimination period. This is really huge. We just think that there are a lot of people buying long-term care policies that don't realize that they might be buying a service day elimination period. And as you can imagine, it's going to take a long time if you have a 90-day elimination period, but those 90 days have to be service days. We see a lot of times where people might have cancer and they're on chemotherapy. They only need skilled care to come into the home twice a week. So that's an example of, where it's going to take them a long time to build up to the elimination period. 0-day home health care elimination period. I had mentioned this, but I just really think that it's so beneficial to know that once you've stayed at home those 90 days and have to go to a facility sometime after that, you're not starting your elimination period. You've already fulfilled that with us. So it's a great rider to have on there for the price. And then again, just our financial strength and commitment to long-term care. I will tell you that this is probably the number one thing I hear from agents is we appreciate that people recognize the Mutual of Omaha name. We appreciate the ratings. We just feel very confident in selling this product. So couple other things I want to leave you with. We do have a mobile quoting tool. This is really cool because if you go to your smartphone and you go to your app store, type in Mutual of Omaha, you're going to see all of our different products that you can easily quote. What that looks like for long-term care is this. 3 simple screens asking specifics about how you'd like the policy quoted, and then boom, you get an output. This is a great way to learn our product, learn the pricing factors of the product, see what it would cost if you move from a 20-day inflation duration, or I'm sorry, 20-year to a lifetime, up, down, different riders. Just a really slick way of just taking a look at how you can manipulate and work this product to meet your client's needs. I had mentioned the care coordinator services. I really think that this is something that should be talked about and discussed in the sales process, and not at what point, they have the policy and then they need to talk about how they would go about getting on claim or talking to a care coordinator. This is a great selling feature to our product. And we do have a great consumer-facing piece that I like to talk about, which is promises kept, because when, the rubber hits the pavement, it's about claims. How many we've paid, how we pay them, what we're doing. And this is a great leave-behind piece for clients to know and feel confident in what they're buying. E-application. This is awesome. It's an exact replication of our paper application. But what it allows you to do is go on to SPA, Sales Professional Access. You can play around with this just to get an idea of what it would look like. But it will allow you to submit an in good order application. So that will really narrow down the amount of processing time on our end. And I think you'll really find it beneficial. And then, of course, where can you find all these marketing materials that I've talked about? Just mutualofomaha.com/broker. You're going to get everything you can imagine out there, including that cost of care calculator, underwriting materials, everything that you can imagine that we have for you to go out and market and talk to clients is going to be on that website. So with that, I want to thank everybody. I want to open this up. If there's any questions, I'd be happy to take them, and we'll go from there.
Hi, this is Bill Norton. I have a question.
Sure.
How many times has Mutual of Omaha raised the rates on existing policies since you started the business?
Well, that is a great question. And it's going to depend. We do have all the data. It's going to depend on your specific state. And so you're probably in Arizona. I don't have that.
California, so is where?
Okay, California. I don't believe we've ever had a rate increase in the state of California. So we can get that for you because we do have all that information. We've actually not had very many rate increases at all because, as I had mentioned, when we got into this market space, when we got into long-term care, we started out really slow. We started letting our career agents sell it, and they just didn't take to selling it very quickly. It just, they were used to med sup sales, things like that. So we got a very small block of business in the beginning and adjusted our product to where we really have it priced out where we think it needs to be. Good question.
Okay. Thank you.
Sure. Is there any other questions for me? And I will mention a lot of times, you might get off this call and think of something. Please do reach out to John or myself. I'd be happy to take any questions that you have after the fact, and we can definitely work with you and get you any information either that you saw in this webinar today or that's just out there on our website. John, I don't know if you want to give any final comments.
Yeah, actually, I do have a couple chat questions that have popped in here. One is, are you planning to share a copy of the presentation with us when finished? And yes, we are. There's going to be another blast email coming out later on today that has, as you probably heard up front, we did record this presentation. So that will be in there, as well as I believe we can get a copy of this presentation, correct, Darcy?
Absolutely.
Okay, cool.
I'll
so
send
we
it
can
over
get that
to you
out.
now.
Awesome. So we get that everybody today. Plus, we'll get a copy of that Hearts and Minds brochure that we had mentioned in our original invitations to everybody today. We'll be able to get that out to you as well. Another question that came in was, you had an example of a 50-year-old with an annual premium of about $1,100. Some of the carriers ask for a lump sum of $70,000 to be paid. What is the difference?
All right. Well, we don't have a limited pay product. So I don't know if you're wondering what the difference in just the premium would be year over year. But it just really depends. A lot of those are hybrid products. So they work a little bit differently, and there might be a death benefit attached to it. But I will tell you that when you go to spreadsheet this, or you're pricing all the different options for your clients, you're really going to find that this is going to be the least expensive product. And John, you're probably even more familiar with it because you run all different carriers. But I always tell people, you might want to look at, if they need both life and long-term care, maybe it's separated out, and maybe it's two different policies. It's just great to look at all the different options.
Yeah, and you are correct, Darcy. We run the gambit here at Heartland. We pretty much do a little bit of everything. So we get into both the life with LTCs, we get into the hybrids, we do the traditional like mutual here, and consistently Mutual of Omaha is coming in as the lowest of all the premiums that are out there. So it is actually, compared to the other traditional, it looks really good, and the flexibility of the two different products that they have, secure and custom, make it pretty much one of our main go-to products for the traditional LTC space. So that's definitely something that we see. I do see another question just came in on chat. Currently not appointed as an independent broker in Mutual Omaha. How do you go about getting appointed in California? Contact me. We will be happy to set you up after. You can reply to any one of the last emails that went out on this, but also you're going to get another email from me as a follow-up this afternoon for all the attendees here, and we'll be happy to get you appointed. The great thing about this is you actually do not need to be pre-appointed in most states. I will put that caveat in there that most states do not require a pre-appointment. Some do, but it looks like in your specific state, it is not a requirement. The only thing that does need to be done ahead of time is, of course, you must be a licensed insurance producer. You must have your E&O, and you must have completed any state-required CE requirements for LTC sales. That must be done before you can take an application and before we can get you appointed. But I will be happy to reach out to you personally at the end to get you all the information you need to get started there.
One other comment that I just thought of is that if you do not already have our marketing guide as well as our underwriting guide, those are two pieces that, I don't know about everybody else, but I really like hard copies. So those two items are always on my desk, and they're great reference pieces. Certainly we can pre-screen anything, and I know, John, you guys take those and you do a great job of looking at clients to find out where they're going to fit when it comes to underwriting. Mm-hmm. But definitely get the marketing guide and the underwriting guide if you don't already have them.
And those are available as digital copies as well, correct, Darcy?
They are, correct. Okay. We can send those out.
Awesome. Any other questions? Okay, I'm not seeing any coming in through chat and not hearing anything more online. So I'd like to thank you, Darcy, for spending some time with us today and going through this presentation with us. And it was really helpful to see all the different aspects of Mutual of Omaha and just kind of understanding where the client base is right now as far as what they're looking for today.
Yeah, thank you again, John. We love partnering with you guys. And if there's anything that we can do to help, just let us know.
Will do. Everyone that was on the call today, don't forget we will be actually sending out an email this afternoon that does have the information that we discussed today, not only the Hearts and Minds flyer, but also this presentation, as well as a link to the recording. If you have some associates that may be in your office or business relationships that you feel might be beneficial from learning more about LTC, feel free to share this with them. We're always looking to help and kind of educate people to be more familiar with what options are out there on the LTC marketplace, as well as creating awareness that this really is a necessary thing for planning to help protect their retirement assets from having to pay for their care. It really, I can speak to this personally as well, that I'm the poster child for what not to do. I've said this before on previous web presentations. My mom actually was diagnosed with Alzheimer's. She does not have long-term care. We're relying entirely on the government, and it has been a massive struggle to get that done. And she is now in an assisted living facility, so that is taken care of, but it's still something that I have to deal with on a daily basis because of the fact that we're having to get approval from things from the government to get things done. It took a year to actually, from the time that we knew she needed care to the time that we were actually able to finally provide it. So having a long-term care insurance policy would have saved us a ton of extra headache, stress, and effort, as well as been able to provide us with more benefits than what she is currently able to receive now. So seriously consider discussing long-term care with every one of your clients as they move forward into their retirement years and planning for retirement. It's an essential component to have. So thanks everybody for coming. Thank you again, Darcy, for a great presentation. And if anyone has any questions, feel free to reach out to me at the end. If you have a personal or a specific client need that you have, feel free to reach out as well. We're happy to run any quotes, illustrations, comparisons, as well as provide any of the underwriting information that Darcy spoke of as well. So again, thanks for calling, thanks for coming into the webinar today, and we will talk to you all soon. Thank you so much.